Breaking news continues to unfold regarding the escalating trade tensions between the United States and China, with President Donald Trump reportedly threatening a further 50% tariff on Chinese imports, set to take effect on April 9th. This new move adds to the ongoing saga of trade disputes that have already seen significant tariff hikes between the two global powers. Just last week, a 34% tariff was imposed by the U.S. on Chinese goods, which was immediately met with a reciprocal 34% tariff by China. Now, this looming 50% tariff on China is expected to deepen the trade rift, creating more uncertainty and fear among global markets. The announcement was made in a post on Trump's social media platform, Truth Social, where the president outlined the potential new tariff imposition. Analysts have long predicted that this tit-for-tat tariff escalation would continue to intensify, and it seems that this prediction is now becoming a reality. The implications of these actions are far-reaching, with the potential to disrupt global supply chains, affect international trade, and further shake investor confidence, particularly in the technology and manufacturing sectors. Meanwhile, the situation on Wall Street has been anything but stable, with markets seeing extreme volatility over the past few hours. Initially, all three major indices, the Dow Jones, S&P 500, and NASDAQ, opened in the red, signaling widespread concern over the latest tariff developments. The markets appeared to be bracing for further declines, but a sudden reversal occurred when Kevin Hassett, the White House economic advisor, mentioned in an interview that President Trump was considering a 90-day tariff pause on all countries except China. This statement was perceived by many as a potential sign of relief, with hopes rising that a temporary reprieve from the tariffs could be on the horizon. In response, the markets surged into positive territory, with investors buoyed by the possibility of a de-escalation in the trade conflict. However, the optimism was short-lived as the White House quickly denied the comments, stating that no such tariff pause was being considered. This about-face triggered a sharp sell-off, with the markets retreating once again. As of the latest reports, the Dow is down nearly 700 points, or close to 2%, and both the S&P and NASDAQ are showing significant losses of around 1.4% and 1%, respectively. The uncertainty around the tariff situation has left investors on edge, with many expressing concerns about the long-term impact on both the U.S. and global economies. This volatile start to the trading week illustrates just how fragile market sentiment is right now, with investors constantly reacting to rumors, official statements, and the back-and-forth nature of the trade dispute. The constant flux of news surrounding the tariffs, whether it's a new escalation or a potential pause, has created a highly uncertain environment. Traders are closely monitoring every development, hoping for clarity, but also fearing the next escalation. The global economic landscape remains in a state of flux, with both China and the U.S. continuing to leverage trade tariffs as a form of economic pressure, but with no clear resolution in sight. As the situation continues to evolve, the markets are likely to remain volatile, and businesses, particularly those dependent on international trade, will have to navigate an increasingly unpredictable landscape. The outcome of this trade war and whether a compromise can be reached remains uncertain, but it is clear that the ongoing tit-for-tat tariffs will continue to have significant consequences for the global economy.